Hi everyone and welcome to my morning report analysis videos on Thursday 28th of February with me, Rich Market Analyst at Hantec Markets. There is a risk negative edge to sentiment today. Nothing too significant, but I mean there's just been a succession of sort of market negative events that are sort of taking place at the moment. You've got this the conflict between Pakistan and India. That's certainly negative for geopolitics around the world, and also we've got the Trump-Kim summit, which didn't really do a great deal. Some ended early, no agreement, and subsequently there's a slight air of negativity around that. You've got Robert Lighthizer, who was giving a committee update on the trade negotiations around with China, and suggested that the threat of sanctions was going to need to be held over China, even in the event of an agreement, and even then an agreement is not necessarily exactly forthcoming at the moment. So yeah, we had sort of a move back towards a slightly sort of less positive market outlook on the back of that. You've seen the dollar, which sort of stopped falling yesterday, started to tick a little bit higher, where it's been basically consolidating today. You got yields which moved higher in the States, but they're back again lower today. And just generally speaking, risk appetite has sort of moved into a little bit of a reverse. VIX higher, S&P 500 sort of dropped away as well. So yeah, there's a sort of edge towards a more negative outlook, and that's sort of helping the yen to perform better. Also the Swissy as well has started to gain a bit of ground. Gold was slipping back yesterday on a dollar strength, but that's rebounded a touch today, back above 13.20 once more. But just generally, these equity markets in Europe are showing the effects of this risk negative outlook, rather than big commodity majors, which are not the big forex majors, which are not doing a huge amount necessarily today. Sterling is has been a big mover in the last couple of days on the Brexit news flow. Slightly tempered that move a little bit today, but remains pretty strong, around 33 big figure on the cable. So in terms of data points today, we finally get US growth for the fourth quarter of 2018, and the assessment of Q4 growth. I don't know what Reuters is up with Reuters data at the moment, but it continues to sort of show just incorrect data, really. Second estimate is not correct. That should be the advanced GDP. 2.4%, down from 3.5% at the end of Q3. Now, looking at the GDP now forecasts, suggest that perhaps that 2.4% may be a little bit high, and that may surprise the downside. So it'll be interesting to see how that growth number comes out this afternoon. Now, in terms of my charts of the day, Euro Sterling, I mean, massive moves on Euro Sterling. Look at this breakdown below. Well, 86.15 had been 2018 low, became the 2019 low, and that broke decisively to the downside in recent days, as sterling has significantly strengthened. And that move has sort of opened up levels that we've not seen since mid-2017, really, and puts it on track towards a new move to the downside, maybe even towards 83 big figure. But what you'd be saying to this is the fact that the RSI has ticked higher a bit this morning as the market's just unwound some of that move. And an unwind back towards 86 figure area shouldn't be necessarily out of the question now. And you've got this sort of band of resistance of old overhead supply between sort of 86 to 87 area, and I think that would be your next sell zone on a little bit of a rebound. We have had that rebound coming through today, the RSI unwinding a touch, but these momentum indicators are still very negative on Euro Sterling, and I think that there could be a bit of a drift back on Euro Sterling back higher, where the sterling strength just unwinds a touch. But ultimately, I think that market is moving towards positioning for a softer Brexit, or perhaps just less hard Brexit, and that should be sterling supportive. And so subsequently, I think that this breakdown on sterling, on euro sterling, does look to be decisive. And could well continue in the due course. So I think that any rally should be seen as a chance to sell on euro sterling, as all these momentum indicators and technicals are negatively configured now. So with that in mind, I wish you good luck in your trading, and I'll speak to you later.